Alright. What is it, day 12 now? Probably 13th video or some shit like that. I'm gonna learn about liquidity part 3. I traded yesterday on paper account and took a losing trade. I think I want to go over that real quick before I start anything else. Let's see, what was it? I was on S&P 500, so I think I had a false. Yeah, here it is. Fucking strat over here. Also, eventually it did go down. Eventually it did. Where did the New York Stock Exchange? Oh, so I had a stop loss. My prediction. Okay, so I was about here when I dipped, and I left it open. My stop loss was actually at 10 G's. And it had to have closed out. I don't know. It had to have closed out because yeah, there's no way. There's no way it definitely closed out. I don't know what the fuck this is. Buy. Yeah, I don't know. I don't know how I don't know if I'm still in this trade or what is going on with this. But anyway, yeah, I lost that trade. I didn't even close it. I didn't have a stop loss. I did it completely wrong. I saw what I thought was a shit out of here. I saw what I thought was a liquidity sweep, but it wasn't. I think I entered the trade right about here. Now it's projecting to. Oh, what was it? I think it was here. I'll have to rewind that footage. But anyway, I entered here. And I was projecting for it to go down because I seen here. I thought this was going to be a liquidity sweep. I think I was projecting off this one. You had this bar here. And I thought that this was a liquidity sweep. But now looking at it, this does not look like it. I think I was just trying to look for a quick trade. I think this is more of a liquidity sweep than anything. If that. I don't think it is. But I'm completely wrong, which is fine. You know, it's funny because the video yesterday was about taking a loss, and that's exactly what I did. I mean, I didn't plan for it to be like that. Nobody wants to take a loss, you know. But that's just what ended up happening. So we'll try again today, probably for a little bit. I can't fucking stay up for market open, unfortunately, because I got shit to do. But we'll see. We will see. So let's get to the video.
What's good, guys? Welcome to boot camp. Who knows what day, but all I know is we are talking about wrapping up our liquidity little lesson, little series within this boot camp. So after what we have learned, also, guys, look, pretty little microphone. I'm spending money on you guys. I didn't need this. I was fine with my trash ass setup, but guess what? I was getting shit on when all you guys were saying your face cam is ass, your setup is ass. Dude, come on, bro. I used to just trade on my phone. You guys are trying to make me up my shit. But anyways, today is part 3 of our liquidity series, and then we will move from there over to our fair value gap series, and then over to our order block series, and then over to our equilibrium series. So we're starting to add the building blocks that we need to actually place trades, and that's going to be part of what we're doing today. Pretty much just talking about the full overview of liquidity, seeing how we can use it to our advantage, really, because now, right after the first day, we understand what it is and why we want to use it. Right after the second day, we can see directly how it works on the charts, right? We can see, okay, a high gets taken out, and then what happens, right? You can see orders get filled through break of structure, through market structure shift, whatever you want to say, and then price changes direction. So that's more of what we're going to be doing today, literally just spotting it out on the chart, helping you guys be able to spot it easier.
You okay? Why are you asking if I'm okay? I'm good, bro. I'm just trying to learn.
And then translate that into how you could potentially take a trade off of it. Again, I don't want you guys to think this is a strategy. It's not. It's a piece that we can plug in to a strategy.
So liquidity is a piece of the strategy. It's not the whole strategy. That's what I was trying to use yesterday as like the whole strategy. Like when I see this connection and then execute, obviously that's not the right way to do it. We are getting stock advice from Lil Pump. Who the fuck Lil Pump? Dude, that's TJR. That's not Lil Pump, bro. Okay, so that's huge. So liquidity isn't. You look sad. That's what, bro. I'm just trying to watch the video. I don't know if I look sad. That's kind of weird, but anyway, liquidity. Sweep is a part of the strategy. Okay, so liquidity is a piece of the puzzle. It's not the whole entire trade. You don't just see this and make a move off of it. Okay, so that's where I fucked up. So that's something new. I'm happy I did it though, because I wanted to see it and try to connect the dots and looking at the chart. So I was looking at the chart for a good hour yesterday and it just took a shit basically. Take notes, my man. I'm trying to, Google Lil Pump and tell me that dude does not look like him. I mean, I could see kind of how you think that, but those are not dreads. That's just normal hair, bro. Let's get back to it though.
Okay, this is not end all be all. Okay, so I mean, literally just starting off, I don't know if you guys can see this, but pretty fucking obvious. We see boom, leg down, break of structure up, closing all the way up here, price rallies. Okay,
so I kind of see how he's putting this into it, because we learned about one break of structure. Next thing is liquidity sweep, which is this. And this is a huge gap on the 5-minute chart.
It's very, very easy to see this on the chart. It's when in action, can you actually see it and can you react and actually take the trade correctly off of it?
It didn't close under it though.
Actually see a chart.
So liquidity was swept, okay, liquidity sweep, but it didn't close below it. I don't know if that matters. It must not matter.
It's when in action, can you actually see it and can you react and actually take the trade correctly off of it? And that's what we're going to be, trying to help you guys do. Let's get rid of my trade from this morning. Schmink. Get rid of this trade that I didn't take. Get rid of anything on here. Cool. All right, so, oops. What the fuck? All right, so to start off, we will cover liquidity on the S&P 500, just because it's pretty easy to spot on high time frames, and it's really relatively easy to show how you could potentially take a trade off of this and how it works. Okay, so first of all, right, why do we want to use liquidity, right? Just a little recap, because that is where the market makers are able to fill their orders, right? Because there's a bunch of people exiting the market and there's a bunch of people entering the market, okay? Perfect. There's a lot of money getting transacted through the market versus when liquidity isn't getting swept or getting, induced, then, it's kind of chippy choppy, okay? Ticky tacky, okay? They aren't able to completely, change direction of the market. All right, so what we're looking for, right, is highs and lows within the market, right? Because that's where people are going to be entering long, and that's where people are going to be entering short, and then that's also where people are going to be getting stopped out, right? So with that being said, right, we are technically looking to label highs and lows as liquidity, right? And most importantly, prominent highs and lows. Okay, so you're probably saying, well, how do we know what's prominent? Well, it varies from time frame to time frame on what is prominent or not. But if you just look at the chart, okay, it's relatively easy to just mark out what highs are prominent and what lows are prominent. This is getting kind of messy. I'm just going to work with what we put on right now. So as we can see, prominent high right here. Why? Because it's the start of this big trend. Okay, we come down, we come up and make a like double top, pretty prominent high. We come down, make a lower low. Okay, then we come up and take out this prominent high, making a new prominent high. And then what does market do? Rally even lower. Okay, boom, we can get rid of these lows. Okay, then what does price do? We make a relatively prominent low.
Another fake guru, bro. Why is okay? People trying to make videos on like helping people with the stock market, which maybe I will do eventually. Why is everybody who's talking about stock market a fake guru to you, bro? Who's the real guru if this is a fake guru, bro? Like, there's a million people that are coming up with strategies, bro. Like, what is bro gonna benefit by putting out false information if it is fake? You know, views. I mean, I highly doubt he's just making shit up, bro.
Right here, and then a relatively prominent high right here. You could argue that these are prominent highs, but you know, whatever. Relative prominent high right here, relative prominent low right here. Obviously, we push lower because this is a downtrend. Okay, what does price do? Come up, takes out this high, right? What happens? Breaks structure to the downside, price falls. Now we have this as a prominent high and this as a prominent low. Okay, price comes down, makes a lower low. Okay, I would also consider this a prominent high because it broke structure on the daily time frame. Okay, what happens?
So far it's like super early. So your question is, how is his strategy working out for you? It's super early into this. I only know like two pieces. I know like break of structure and barely understand liquidity sweep. But I don't know. It hasn't worked yet because I haven't gotten to that point yet where it's enough information to take a trade. So nothing has worked because not enough information was given yet, like to this point. Eventually we'll try it, see if it works, but till then, as of right now, it's just learning the basics. So I haven't put any of this into like actual, into an actual trade is what I'm trying to say.
Price rallies up, takes out the prominent high, comes down a little bit.
And it's only like day 12, and I've only spent maybe, I don't know, 12-ish hours, if that, maybe plus minus a couple hours.
Okay, now we push past that. Where is price likely going to draw towards? This high, right? We can think of liquidity essentially as a magnet for price. That is where price is drawing to because that is where the market makers want to push price so they can get their orders filled. Make sense? Cool, right? So any form of liquidity, right, consider it a magnet for price, right? We're not considering it, oh, buy, oh, sell. We're saying, okay, this is an area where orders could get filled for us to potentially take a trade. It doesn't mean when this high gets hit, we press sell. It doesn't mean when these lows get hit, and press buy, right? Because if you did that, you would lose way more than you win. Right? We wait for these areas of liquidity to get hit, and then we wait for confirmation through break of structure, through other confluences.
Okay, so we'll look for these liquidity sweeps. When they do happen, look for confirmation, which I think I've seen a trading video of his where he was talking about, you know, waiting for confirmation. The trade hit, he got in, made the money. But okay, so this is all working together. So I'm happy I looked at the stock chart yesterday and actually put this and looked for it, even though it might have not been a full liquidity sweep, but just looking at the chart and trying to see how it moves was worth it in itself to try to make a trade.
Right?
Paper trade.
That we'll talk about later in this. Okay, we wait for those confluences to give us the confirmation that liquidity has been swept and that orders have been filled. That makes sense, right? So when we see a liquidity sweep, when we see these prominent highs and lows get taken out, it's safe to assume, okay, I'm now going to wait for confirmation that orders have been filled, because then price is going to go in the opposite direction. That makes sense? Cool. Okay, and that's all liquidity is. So how can we use this to our advantage for entries? Well, I just talked about it, right? We wait for those prices to get hit, and then we see what price reacts off of it. If price doesn't react, perfect, no trade. If price does react, perfect, act on it, take a trade, right? And then, on the contrary, how can we use liquidity for take profits, right? If it's a magnet for price above, right? If we think, okay, yeah, highs will attract price because that's what it wants to seek out in order to go lower. If we're saying, oh yeah, this is a relative bear market right now, right? If we're saying, oh yeah, this is a relatively bear market, I think price will go lower, right? Then we're waiting for highs to get taken out. But then, right, when, let's say we do find a trade, let's say we're able to find an entry, whatever, here. Where are we going to target, right? If we think price is going to go lower, if liquidity is a magnet, then it's probably going to start seeking out these lows. Why? Because just like how market makers need you guys to be entering and exiting for them to enter orders, it's the same thing with exiting, right? Because if they exit at a random point in the chart, right, without a low or a high being like an area where they take orders out, right? If they were to just, exit right now, right, price would probably drop, price would move in the other direction. They still need people entering and exiting the market just like they do to fill their orders, to sell their orders, right, to exit their orders, to exit their position, right, without price just making a big move after those positions get closed out. Does that make sense? Because same thing with them wanting to go short at the highs, they also want to, close, right? If they're going short, they're going to be closing their position at lows. Why? Because there's going to be people going short. There's also people going to be exiting. Lo siento. Sorry. Wow. I've been here for too long already. I'm sorry for the language shift. I was just talking to this lady on the phone in Spanish, so my Spanish is not nearly as good as what it used to be, but it gets me around here. So does that make sense, right? So if we're looking for shorts, we're using liquidity to be the peak of our interest, right? We take out a high, we get a break of structure to the downside, perfect. And then like any other confluence, perfect. We can go short. Okay, and then where are we targeting? The lows, right? Because that's where they can exit their position. Just like how they were able to fill their position at the high, they have to exit their position at the lows. Make sense? Cool. Okay,
so that's pretty interesting. So you're seeking out the lows as well to see when to, close your trades. So that's something new as well.
Go through more examples of this just working. And we can even go over the examples right here that we already marked out, right? So we had a prominent high right here. As we can see, price pushes up. Where do we get the break of structure? If you guys remember that portion, boom, we get a break of structure right here. This was the most recent low. We get a closure below. Perfect. You can either enter off that, enter off of, some sort of some sort of fair value gap on the 4 hour within these candles, right? We see that get filled, chop, break down. Okay, whatever you want, right? We get a liquidity sweep, then a break of structure. Those are pretty standard, okay? Then, where do we target? Next previous prominent lows. Price draws to it just like a fucking magnet. Moving forward, okay? Where is our next previous prominent lows that get made prior to the break of structure to the upside on the daily? Right here. Where's the prominent high that gets made on the daily? Right here. Okay, we see price move up past it, went pretty far past it, but then we get a break of structure after another form of liquidity gets swept, right? We have highs right here, right? We push past this one, don't get much of a reaction. We push past, take out this one, we do get a reaction. Break of structure to the downside, you know, whether you find an imbalance within here, this daily candle filled this fair value gap within here, whatever you want, okay? It filled orders, okay? We see the confirmation of it with the break of structure. Where does price go to? Where does it get magnetized to? Previous prominent low. Now we have previous prominent lows right here. Prominent highs all the way up here. And some other prominent highs in between. But we've already pushed past them, right? We can see that, right? We had this prominent high gets taken out. We failed to reach this low. We're just chopping up. And now we're pushing for this high. Okay, so you could argue that this is a prominent low and this is a prominent low, and none of these highs have caused a reaction yet. So now this is the one that we're looking for. Cool? Does that make sense? Perfect. Let's show it. Now let's show this happening on a smaller time frame, not just the daily, because this happens on literally every single time frame. And it can be used to your advantage, just like this. Okay, we're looking at the 4 hour on GBP USD. What's the first thing you see? Big rally up and then a big dump. I wonder why that happened. Okay, we have boom, highs right here. Okay, you're probably saying it never got hit. Exactly. Look on the 1 hour. Sweep. When's our break? Boom, with this candle right here. Wait for some type of retracement on up, right? We get a break of structure with this candle, boom, push back up, hits this order block, capitulates. Taking out prominent low, filling this imbalance, so many areas for you to take profit here, but we're just talking about liquidity right now. There will be a whole section on how to take profits later. Okay, does that make sense? Same thing here. Right? Boom, we have highs right here, barely gets wicked. Price, okay, where's our break of structure? We get a break right here. Right, we have a low right here, down candle, up candle. This is our low, most recent low that's, you know, applied to a break of structure. As you can see, none of these lows got broken. This low gets broken. You can scale into the 5 minute. Boom, imbalance gets filled right within here, find some sort of confirmation, boom. Go short, where? There's lows right here. There's a full freaking imbalance within here. All of that, right? All that good stuff, and we'll get into that later. I'm literally just trying to show you guys how liquidity works and how you can use the draw on liquidity for taking profits, and then also for entering positions. Same thing with gold right here. Lows, boom. We see, boom, price drives in, boom, quick regain up, closure above right here. Yes, we get some dip down into this imbalance. This is probably where you would have wanted to get your orders filled. Okay, find some sort of entry within here and we'll go over that. Where does price draw back up to? Boom, previous highs. Once those previous highs get hit, boom, orders liquidated, orders filled. Now we're chopping. Simple, boys. Very, very simple. And it gets a lot easier when you start being able to just like spot this like at the back of your hand. Like you should be able to pull up a chart and just be like, oh, that's a liquidity sweep. Yep, that's a liquidity sweep. Liquidity sweep. Liquidity sweep. Right? You should be able to see these like none other. Sweep, rally. What's this right here? Oh, sweep, rally. You know? Oh, what's this? Right here. Sweep, drop. Sweep, retracement. You know, it's really funny how easy it is and how comfortable you get starting to see this. But it's one thing, you know, being able to see it. Oh, sweep, fall. What's this? Oh, sweep, rally. You can't tell me that this...
Sweep, rally. So I was looking at here. Sweep. And I was targeting shorts. Sweep rally. Sweep rally. So why the fuck? I mean, it really wasn't that much. I was targeting this here. This is a very small, I don't even know if that's considered a liquidity sweep. I mean, it's not shit really. This is more of a liquidity sweep if anything. But this is when market was closed. Tokyo open. So let's look at New York Stock Exchange. This is more of a liquidity sweep than anything. And it rallied up a little bit. Yeah, maybe I just looked at it wrong. It wasn't very like high peak. It was just very low. It was very mid. Very I don't know if it was valid.
Shit doesn't work, right? You really can't. You cannot tell me that this shit does not work and it happens on every single time frame.
Someone asked, you're watching TJR again. Yeah, bro, this is day 12 out of fucking, what, 55? So I'm going to be watching him for a very long time. And I'm going to be streaming every minute of it because that's my goal. I want to put 100 hours, have it documented for one. And then when I'm looking at the charts, for the most part, I want to be on stream looking at it. I have been, like, playing on my phone, but it's like looking at these charts on my phone on this app I got, it's really not, it's not like on TradingView, you know. I could still put like stop losses and stuff like that, but it's not as good as when I'm doing it on the computer, and I would rather stream it, to be honest.
Right? Sweep, rally. Like, I see this shit happen on the 15 minute. I see this shit happen on the 1 minute. Oh, damn, that's crazy. There's a low, sweep, rally. Oh, damn, that's crazy. These highs, sweep, drop. It's how these markets move. It's how orders get filled. It's how markets literally flow. Damn, that's a cool low. Sweep, rally.
Fuck, how the fuck did this guy's sweep work and mine didn't? This ain't even that much of a sweep. I want to keep looking back at my example because that's what I'm going to do. Sort of a sweep. Sweep, rally. Sweep.
I'll take that low. I'll fill my orders.
Let's see, maybe I was looking at it completely wrong. Maybe if I did target this low, which it did hit actually. Maybe I should have been targeting this low. I don't know. Or figuring it out as we go.
You know? That's all this is. Okay, so again, that was just me trying to show you guys like examples of all of this going down. And hopefully you guys have a better idea of liquidity. Again, now homework isn't just seeing the liquidity sweep. It's not saying there it is and just marking it on several different time frames. Now I want you to try and pair it with something. Try and find 5 liquidity sweeps on whatever pair you use. I don't care what time frame. Find 5 liquidity sweeps, okay? And then see how you could have, you know, gained more confidence for a trade. You see the sweep and then look into the price action that follows. Okay, there was a break of structure. That's a confluence for me to trade. Okay, and then after the break of structure, it filled an imbalance and reacted off of it. That's where I'm entering. Okay, we got a sweep of liquidity, a break of structure, it hit an order block, reacted, boom. That's where I'm entering. Simple as that. That fucking easy. It's that fucking easy. Okay? And that's really what our strategy is going to get into but you guys don't necessarily completely understand some of the logistical things that we're going to cover. But that's it for now. Okay, that is liquidity explained. Hopefully, you guys have a good grasp on this. If you don't, rewatch the 3 videos that we've made on it, and then also go back and rewatch my how to spot liquidity sweeps, just like very first video that I put up, like one of my first videos on YouTube. Okay, so if you're having trouble with this, it's okay. There's a reason why I split this up into 3 parts. Okay, understand why we want to use it, and understand where it lies within the market, and then understand that liquidity, it's fine to mark out every single high and low, but not every single high and low will be used as liquidity to fill orders, and that's why we wait for a confluence. That's why we wait for a break of structure. That's why we wait for a fair value gap, then a reaction. That's why we wait for an order block, then a reaction. That's why we wait for all of that stuff. Does that make sense? Cool. You guys know your homework. Find 5 examples of a liquidity sweep trade setup or a liquidity sweep and confluence for why it went in the direction it did. Get that done. Take some notes. It went in the direction trade setup or find 5 examples of a liquidity sweep trade setup or a liquidity sweep and confluence for why it went in the direction it did. Get that done. Take some notes. And then let's get after it. All right, I'll see you boys tomorrow for some discipline.
Okay, so that's what we're gonna do. I'm gonna take a 5-minute break or so. I gotta hit the bathroom, get some shit ready, and what's it called? After that, I'm gonna pop back on stream. I'm gonna be looking for liquidity sweeps and why to take them in the chart in a whole different section of the stream. And then about around 8 o'clock I'm gonna dip again, and I'll probably be back on the charts at about 10, 11, maybe noon. We'll see. Alright, I'm gonna see y'all in